Hello, Warriors. Good evening, Didier, and good morning, Brock, as attendees stretch the planet in all time zones. Hello, Arena. You go. Everyone doing okay with dollar weakness here? So, hi, Kevin. Nice follow through. Back over this pivot, breakdown, negated the breakdown, still going. Okay, there is some stuff up here around La Ponce, around 21 and a half or so to 22. Um, I wouldn't stay long on closes back under 2050. Okay. But there could be, another 70 pips. I know some people looking for maybe 22. They're calling it a four. And then they're looking for one more break down towards 118. Dixie is right around the 2 week off number. Something I prepped the guys over the weekend with. The 2 week off number is this candle, 9058, and we are right there. So, of course, it's a weekly number, right? So 9058 by Friday is pretty important. S&Ps, after taking out the uh, early morning high, it popped up, was I just one tweet I want to point everyone to. Mark Newton was with us last week, and I saw a tweet by Mark, and he has some Tom DeMark exhaustion in the S&Ps on the 12th, so that's Friday. So, Mark said he didn't think there was much time left on this particular wave to the upside in the market. So I pay attention to what Mark talks about, and I happened to catch his tweet about the 12th and Tom DeMark stuff setting up for later this week. Need a what's a PB? Price break?
Pullback.
Well, oh, okay. All right. Thanks, Blake. I think I'd know something like that. And with the dollar
Early,
rallying, huh?
super early in the morning.
Yeah. Good morning, bro. So, with the dollar pulling back, um, look how close we are to making new highs in Kiwi. So, is this going to be a failing rally up here, or could we make one more high? They were, as Blake put it, they were very buoyant when the dollar rallied from 89.20 to 91.60. Similar in Aussie, this is either a great shorting opportunity or there could be another high coming here in the commodity currencies. We're getting a follow through with the yen falling apart up here. So with the dollar, the yen's also taking a hit. Okay, there's the yen, there's the dollar, very similar, right? So the only difference is the yen had a bigger rally, and so far looks like a shallower pullback, stopped right here on the daily at the 200, or this is a 50. Okay, what is it? 200, and the 50 is coming in at 104 and a half, and we know that 104 was a big number, right? That's where we had a breakout in the end once we got through the 104 level. So we'll see what's going to happen down here between 104 and 103.80. Is this the end of the bullish move in the yen? If so, then that was the end of the decline in precious metals, which I still think the silver, this is going to be a failing rally. I'm not sure. It's Tuesday, could be today, but compared to this, it looks like we could have a failing rally here. And if the yen is bad, you would think yields would pull back. And here's the 10-year, and it looks like they are after making new high. So the yen is the maestro, and in the orchestra is rates and metals. playing the instruments. So keep an eye if you're, precious metal trader, you have to have a view on what's happening in US dollar yen. If you're a bond trader, same thing. Okay, everyone cool? Any questions for me? Okay, that means you understood everything. Getting a little pop in euro pound, and that's given euro leadership. And something that it's been frustrating to me because even during the dollar rally, trying to short cable against looking for a top, it's the only pair that really gave you no pullback. It's actually the strongest pair. Look at that. So we're at new highs in the pound. Now, if you were a member, you would have waited for this area to consider sales, okay? Because there is some work that you really need to see by Andre and Grega on cable, also in euro. Okay, so you may want to join because is this the beginning of a new decline in the dollar where we're going to new lows, 88 and a half, 80, 88, 85, or is this just a break in the dollar to buy? So I went through a lot of the research. This is definitely an important part of my intelligence gathering, the traffic light page. So if you're not familiar with the traffic light page, trading without following traffic lights is like driving without them. So, something you want to consider. I know our deal is gone. The discounted deal is gone. But, I know the team well enough that if you wanted to get something, say 6 month or 1 year, if you go to customer service and tell them coach sent you, they might do something for you. If you just missed out on it and, you procrastinated and now you're having second thoughts and you're saying, no, shoot, you know, why did I get cheap with myself? You know how I know that? Because I'm generous to others and cheap to myself. So if you want, if you don't want to be cheap to yourself, a lot of great research, a lot of great numbers, a lot of great descriptions on our site. Go to customer service. Permanent, okay, it's a permanent decline. Okay. Well, I know some very smart people that agree with you, Sansi. Okay. In particular, if you want some long-term targets in the dollar, and people thought he was crazy when he was talking about these numbers in Bitcoin, but Peter Goodburn's talking 50 in the Dixie. Yes, I have an interview with George in Harmony, and George is going to address a problem we all have, how to deal with drawdowns and, how not to let it affect you so that the drawdown turns into a catastrophe, because we're all going to have those periods. And it really takes great psychology to just consider it being part of the process instead of the end of the world. You know what I mean? Have you ever felt when you've been in a drawdown or taken a hit, it almost felt like the end of the world? So George is very good with psychology. He'll be here at the bottom of the hour. Okay, Forex Gal? So, we're bringing people, and it's no accident either. It's planned for, right, DJ? Okay. Well, it's the easiest thing to sacrifice, isn't it? Sacrifice the dollar. It's better than raising taxes and putting out more bonds. So, okay, and that'll be the beginning of crypto. We'll only have crypto after that, after the dollar crashes, right? And then everything we do will be credit and debit. And George Orwell and Aldous Huxley will be, doing somersaults in their graves. Okay, DJ, you conspiracy theory guy. How you doing today, Blake? Think this
Hey, good
rally
morning,
in
Dale. How's it going?
yeah, pretty good, man. You think this Euro move has legs?
I don't. I don't.
Okay.
Because I think we're probably pretty close to like a near term top in equities. So if it is, I think that the dollar is probably going to find some bounce in its step soon.
Okay.
But the euro's at the 38% retracement. I think it might get back towards the 50% retracement,
Yeah.
maybe towards the 122 level. But I wouldn't, if you didn't catch it on the long side down, towards 120.50 like
Yeah.
yesterday or
Yesterday,
on
right.
Friday. I don't think I'd play it on the long side here. But that's just me. I'd if I'm gonna play anything on the long side, Dale, I'd play the sterling because we're at 52-week highs right now, and
Yeah.
I know a lot of people are like, well, I don't, it's the cable and blah blah blah. But man, you have to look. This thing hasn't pulled back much, right?
Been relentless because
No,
I know I've been on the wrong side of it a few times.
yeah. I mean, it's been really strong, and so I think that if you're going to play, the dollar on the short side. Ooh, sorry, this is probably one of the better currencies to trade right now. Because it's
Yeah.
in breakout territory. It's already shown it's showing its colors right now.
And you've been
You know,
working the long side of cable by being short other crosses against it. That's
yeah,
worked
like
out, right?
you were just talking about the euro sterling. I
Yeah.
the euro pound, and I like the euro pound on the short side.
Yeah.
It's we are consolidating around 127% extension, but this move outside of this triangle has been pretty bearish. You can see we've got you could actually argue that this is a flag, you know.
Yeah. Yeah.
It's a flag pattern lower, and I would make the assumption that we're probably heading back down towards we could be heading down towards the low
80s.
80s, and yeah, you're like 87 pence or something like that. Even the 161% extension is just below 87 pence and below the horizontal
87
level.
Mike Pence.
87, did you say Mike Pence?
Yeah.
That too. um I think the sterling actually looks pretty bullish, and like I said, if you want to that if you're like, well, I'm just not going to play the dollar on the short side because I think that the dollar might bounce or whatever, then yeah, I think the sterling against commodity currencies other currencies is the way to go, and commodity currencies too. You look at the pound Aussie. You guys know I've been long the pound Aussie, and I'm bullish while we're above 174. It's just it. I'm bullish above 174. Period. End of story. That's because that's the long-term triangle support for this currency pair. I actually think we're going back towards 190, maybe even back towards 2, maybe even further than that. And I know some of you might go, oh, further than that, can we even do it? I mean, remember, this is post Brexit. So I think that the risks are that the sterling continues to see inflow. And I think it's potentially quite bullish. So, whether you want to play the pound Aussie or maybe even the pound New Zealand, especially if we break back above 192, I think that's pretty bullish too. So I think that there's some opportunities there, Dale,
Yeah.
in some of the sterling crosses. Hello.
Okay. Yep.
Oh,
I'm here. I'm here, buddy.
yeah. So that's kind of that's what I'm thinking right now. You were just talking about the DeMark signals. Now
Yeah.
let's also say anybody who's followed DeMark and who's been trying to fade the stock market rally for the last several years has been on the wrong side. I mean, look, there are it's kind of like, I mean, I've heard so many DeMark
Horror
patterns,
stories.
reversal areas and
Yeah.
blah 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 for like the last couple
He
of
gets
years.
a lot of money for his stuff.
Oh yeah,
I mean,
his office is just down the street from where I live.
oh,
Tom DeMark.
oh,
His daughter actually runs his operation.
oh, he's
So
in Scottsdale then, huh?
he's in Paradise Valley. Yeah.
Oh, okay, yeah.
Yeah,
Huh.
he's literally just okay, so when I first moved back to Arizona, I rented an office out of a hedge fund's office for
Yeah.
like a year and a half. The problem is that I had to be at the office by like 3:30 so I could do the webinar. We used to do the morning edge.
Oh,
So I'd have
yeah,
to be
yeah.
there by 3:30. That means
Oh,
I used to get up at 2:15,
yeah.
get my coffee, roll out of bed, go to the office. I was driving in, I was pulling into the parking garage at like 3:10, and
It
I
makes me
did
feel exhausted just hearing about it.
I did it for like a year and a half, and I was like, you know what, I can't do this. I thought it would be nice being in an office environment, working with some people, but
I
nah,
miss that.
huh?
I miss that.
I do too, but it was brutal.
Yeah.
Anyway, I
Maybe
guess
after
the point I want
COVID
to try to
someday.
the point I want to try to make here with S&Ps, we are up against channel resistance. It is turnaround Tuesday. We might see some selling up here potentially, and if we do, I think you got to watch currency. The in the currency market, correlations. Well, there's one. Haven't been working all that well because no one thinks the market is going anywhere. Like if you're like if you're bearish the peso, this is a good example. I just bought the dollar Mexican peso this morning at 04. So if you guys were in the chat room, here's the chat room, by the way.
Yeah.
Um,
And you talked about this on the week ahead, how both Canada and Mexico, USD CAD, USD MEX, we're not making new lows with the market making new highs, and
right.
kind of a little possible market message there.
Yeah. I mean, so you can see I pointed out at 5:03 this morning. I picked up some dollar Mexican peso. I sold half of it at 2:08, and then I'm going to sit in the rest because if you're Forex Analytics subscriber, remember you only have to do the even if you want to do the light version, you can still get my basic analysis in the when I'm updating stuff. Anyway, so here's your descending wedge. We were trading at when I push this out as 2003. We're at 2010 now, but that was just about an hour ago. If the market becomes convinced that we are seeing some equity market weakness, once the market is convinced of that, that's when you're going to start to see the Aussie, start to move lower. You're going to start to see the Mexican peso move lower, the Norwegian krona, that type of thing. So what would convince me that stocks are heading lower is probably you have to head back below 38.69. So
Previous highs.
Yeah, I mean, and that's 30 points, S&P points, which isn't very far away. But I'm just saying, once you get below there, that's when everybody's like, oh, okay, that was a false breakout. We're gonna probably roll over now, that type of thing, right?
Yeah.
So, wow, the pound Aussie just lurched to new highs right there. Just pushed like 20 pips since we were talking about it. It went from
Nice.
55 to just pushed to 70. So yeah, it's starting to. It just hit highs on the session. So anyway, I think that if the stock market starts to break back below that 38.70, it's going to start convincing people that, hey, maybe the top is in for now. So now I need to start selling commodity currencies. I need to start selling emerging market currencies, things like that. But hey, I'm not going to take too much more time. I know Steve and Stelios are here. Good morning, guys.
Just me, actually. It seems I can't see Steve, but good morning.
What's happening?
I don't know. Maybe he's picking up his son and is late from school.
Oh yeah. That's I know the school schedule's kind of jacked up.
I'm
Jason
here,
has
so
him pinned, so tell this. Tell the community the truth. Jason pinned Steve and he can't get up.
There, that's it. That actually happened for real.
Don't worry, I can take over for a bit and
Yeah, I'll let you. I'm just gonna say Forex Gal had written something about, is that a megaphone pattern? That's the megaphone pattern that we followed for the longest time.
Yeah.
She asked, is this a megaphone pattern? I mean, it could be, and I guess,
Yeah,
could be
you
a
can find them
megaphone
everywhere if you want.
Yeah, I mean, I'll tell you what, if you're going to be bullish risk, buy dips. Don't buy rallies. Well, I mean, buying rallies, I guess, has worked if you just hang on long enough, but
Yeah.
you know what I mean? But I think at this stage, it's probably better to, buy a move back to 3,700. You get down to 3,700, this is going to be a good level to be on the long side, right, Stel? I mean, better than buying up here. So, that doesn't mean that you'll be right, or excuse me, that doesn't mean that you won't be wrong if you start buying up here and you'll eventually make money. I mean, you could, but just buy dips, sell rips, that type of thing. Anyway, all right.
Makes
Well, I'll
sense.
let you take over, Stelios. I'm sure
I'm here with him.
Yeah, no problem. Thank you, Coach.
Yeah,
Let me
I'll be
share.
here too. Yeah. So
Okay.
All right. So
Wow.
so Blake was talking about the dollar, and and you said somebody, who was it who made the prediction of 50 on the DXY?
Oh yeah, that's Peter Goodburn.
Peter Goodburn, yeah, I like him in general, not because of that prediction, but overall I think he's a great guy. And
Yeah, he's a nice guy.
the question, I have a lot of friends asking me, and people I work with and stuff. I say, what do you think about dollars? I always say, look, I think in the medium term it's going a lot lower, and they're like, but why? It's the world's reserve currency, and the U.S. is a strong country. And, ignore all the noise that can happen. We had Trump, we had all sorts of stuff, and my view is, what affects FX rates? Well, one big part is rates and the future expectation of rates. Well, those are at zero or zero-ish, and they're not going anywhere. So that goes out of the window. And then what else do you have? Well, you have the changing money supply. So you look at each country and the deficits that they're running. And of course, every current country, probably apart from Germany and Norway and a few specific, handpicked countries, they're running deficits. But then you look at what kind of percentage of GDP is a deficit, and you look at countries like France and Japan. I think they're like 2.5%, 3%, and then China, Russia, they're like 6%, and then you have the US, which is at 15%, which is huge. Obviously, we are in a very special time. If you look at the last 3, 4, 5, 6 decades, this is a very peculiar situation we're at with COVID and all the measures and the lockdowns and all that. And there's huge amounts of stimulus, but still you can't get away from the fact that the deficits in the US is huge, and it's not planned to tighten. I don't think there's much they can do, at least for the next year, 2, 3. I don't know. So the dollar, it is the world's reserve currency. Some people say that the US has to maintain a deficit because it's the reserve currency, and the whole world's going to need dollars. But you can't get away from the fact that this huge amounts of deficits as a percentage of GDP is destructive for the currency. I mean, it's economics 101. So eventually the dollar is going to decline, and that of course is going to make the US products more competitive price-wise, but it needs to decline quite a bit. So I think, I've been looking at the DXY for a while now, and I don't know if you guys remember, we were at just below 90, just below 100 or something like that. And I was saying, look, I think we're going a lot lower, and we have gone lower, but now I think we are, and I've said this for a few weeks, I know now, but I think we should see some kind of a bounce. It has to come with risk off. I know that you're going to laugh when I say risk off, but it has to come with risk off. Otherwise, the dollar is going to find it difficult to rally on its own. My humble opinion. So
excellent analysis.
If we do see some risk off, thank you, Coach. If you do some risk off, then the dollar is going to bounce, and I think it's going to bounce quite hard. And why not, get to the 50% of this previous decline, which is around 96, which coincides with this trend line, which was broken, retested. It could come back up there, and I think that would be a gift to actually short the dollar index at that point. But I think at these levels and risk reward, I think it's difficult for me to be short the dollar here. The time to be short the dollar was a few months ago, and it's done. It's done well. Whoever has been short the dollar. So that's my view on the dollar overall. And we have to admit the dollar is driving pretty much everything. So you have to have, you have a view on equities, you have to have a view on the dollar, you have a view on, the dollar pairs. Obviously, you need to have a long-term view or a short-term view, depending on your horizon on the dollar. So that's my view. And we have these signals where it looks like we may be close to a turn. I know this is, the equities have gone on a tear. I mean, look at that. That's just, it's not 45 degrees. It's a lot more than that, right? It's crazy. And you have oil, which has also rallied a lot, so it seems to be a total risk on move from these lows after COVID. But, I think at some point there's going to be some kind of relief to the downside. Timing that is obviously very difficult. So I'm not saying go short. That's not what I'm saying. But I think if you're long, you have to be quite careful now, and you have to take. If you've been long and you've done well, you have to take some profits. I mean, that's my view.
You have to be a little defensive here, don't you? Still?
Exactly. Same with same with cryptos. They've gone to the moon. We saw Elon Musk talking about Bitcoin and Dogecoin since January, and now we find out that they have actually been buying cryptos. Tesla has. So, and that's gone. I mean, that's gone vertical completely. Which is, what do you do with this chart? I haven't traded Bitcoin or any other cryptos, but what do you do here? It's very difficult to short it, but it's, for me, I look at this chart, I refuse to go long on a parabolic move. It's like, we've seen this in the past in other instruments and other asset classes. I just don't know what to do with this. So I'm just leaving it well alone. But I know people who have been long and have made a lot of money, and well done to them. And, they have, more guts than I do on that front, I have to say. What else? The pound is interesting. I'd drawn this chart some weeks ago, and I said late 2020. I thought that with a agreement, whatever kind of agreement, I didn't care. As long as we got hard Brexit off the table, I thought that we're going to go lower. We are going lower quite nicely, actually. And now we've gone to this zone, and it's kind of taking its time now. We could see a bounce, I don't know, but I still have a view that we're going to test these lows down here around 82, 83. And then it becomes a very different proposition. I think up here, it was almost a no-brainer to go short euro pound or to go long pound pairs, because, there were a lot of doubters, but I always thought, look, there's no way, especially in the middle of a whole COVID crisis, that they're gonna let the situation just go out of hand and go to a messy no-deal Brexit. So that was, nothing's a no-brainer, but that was, in my view, it was a relatively easy decision. The question is, what do you do when we get down there? That's a lot harder. So.
Nice review.
Yeah.
You have a crude chart still? We have a.
Yeah.
Okay.
I haven't looked at crude for a while. It's very difficult. I thought when we were losing momentum here, remember in the low 40s, I thought we would see perhaps a correction lower. We didn't see it. It just, just crashed through this trend line, and it's just going. Given the global situation, I think it's. I think crude, say a year from now, I think it's going to be lower than here. But the question is, how does it get there? That's a problem.
Okay.
Because on the way down, it was difficult. We've said this before. On the way down, you had production which was being cut. Now production is being increased, but the rate of increase is not, it's not something that happens from one day to the next. And supply suddenly floods the market and prices go down. It takes some time. So I think we might have a little bit to go, but above 60, I think it's going to be a very nice place to probably short it. But I am still watching it. I'm not doing anything crude at the moment.
Great job. So you just demonstrated that you could, be a great analyst and be humble at the same time. you know.
Well, I always say if I don't understand something, I don't trade it, and if I don't
Yeah.
have a clear conviction or something, I just don't touch it.
Yeah, I love your charts. Okay, so anyway, thanks for sharing today, buddy.
Thank you, man.
And,
Thank you.
and okay, so Blake and Stell, thanks very much. I'm going to
Thanks, Dale.
Thank
promote
you.
our guest. You're welcome, George. Looking forward to talking to you. And you've been promoted to a panelist now. And I'm going to ask you to unmute. Welcome back, George. Hi, buddy. Can you unmute your mic? I don't hear you yet. Steve, the producer, is not here, so it's your drop-down menu to use your mic. Let's see. I can't do it.
Can
Okay,
we unmute him?
I
No?
tried to.
Yeah.
Let me ask to unmute. No.
Yeah, I
Okay.
tried that too.
Yeah.
It does seem muted.
All we could do is ask him to unmute. You there, George? And I see a little microphone muted above the mute on the page. You see that? But I can't do that. Wrong, George?
Oh, there you go.
Oh, no wonder. Okay. So let me see. The other George isn't here? Gosh, I told him about the time change. Okay. Let me go to
Oh,
Twitter.
that's Georgie from our chat room.
Yeah. So
Maybe he'd like to say a few words.
Georgie, if you want to say a few
Georgie.
words.
I'm gonna, anyway,
so-
I'll have to reschedule, I guess.
Oh, well, you know
sorry,
what?
I
The
just
good
came
news
in. What's the problem?
The good news is Steve just got here, and Steve can talk. So
Yeah.
What's the problem, Dale? Who's the guest?
George in Harmony.
Sorry, George who?
In Harmony is his handle.
Okay, so he's not
yeah.
here, or there's
He's
some...
not here.
Yeah, we thought we had him.
Okay, sorry.
We thought we had him,
Because
but
they
we
just
had
wrote
somebody
to me
else.
that I need to
Yeah.
unmute him or something.
Yeah, we
Okay.
had somebody
Oh.
else.
Yeah,
we were trying
yeah.
to unmute one of our listeners and one of our traders in our,
Yeah.
our chat room.
And he had stage fright, or he would have just gone for it.
Yeah, he's like, no way, no, thank you.
Yeah. So maybe George, I let everyone know about the time change. Okay.
Well, let's
All right,
let's let Steve rock it out on. I'll catch you guys in about 40 minutes or so on the Face 2.0.
Sure.
Okay,
Just
buddy.
somebody, sorry, because there was an accident and I was like stuck in traffic, which wasn't pleasant. Somebody just give me like a, short update what you haven't talked about, so I can, go a little bit over it.
We talked very broadly about a few things, so nothing. Actually, what did Blake talk about? He talked about equities, dollar. We talked about the main
Pound crosses. Blake talked about. Euro he wouldn't be buying the euro up here. So we covered a lot of stuff.
Okay, so I'm going to give like a broad, like 5-10 minutes review of a few key points, and then we're going to keep the rest for our subscribers in the second part. So for me, the things I'm watching are, and I mentioned that yesterday as well, is one, the DXY, and specifically I mentioned yesterday that two were the key levels I was looking for DXY. One was 91 because it was the neckline of the inverted head and shoulders formation, which today we seem to be breaking down from. And the second one, and also very important, is the ascending trend line support of this rebound, because in essence it defines what might as well be a corrective rebound, because so far the characteristics are clearly corrective. Coincidentally or not, if you notice, at the same time, the RSI is testing an equivalent trend line support, right?
Mm-hmm.
So to me, the dollar still looks heavy. The possibility that the dollar rebound was purely corrective and there is at least one more low before we get some type of a big rebound seems higher by the day.
Do you think it could work its way into that green boob you have on the right-hand side? See that?
Here,
Yeah, the boob.
I
The
think
boobs.
I think most probably if we break through, like if we
Yeah.
close below 90.50,
Yeah.
I think most probably we're just on our way to new lows.
You know,
That's what I think, Dale.
yeah, that's a 2-week reversal under 90.58. Yeah.
Yeah.
By
So
Friday.
so I think if that happens, then we should be looking for the next
Yeah.
confluence of supports, which is at 88.25. At the same time, obviously not coincidentally, as the DXY is attempting to break lower, the Euro USD is attempting to break through this,
Yeah.
what looks so far like a corrective channel, because and look at this, the inverse thing is happening here with the RSI, right? RSI
Yeah.
testing trend line resistance as we're testing this trend line resistance. So
Nice.
not a done deal yet, but I would be very, very skeptical if I was long the dollar. Very, very skeptical. I know, and we've talked several times about, sentiment positioning being more or less one-sided, etc. That doesn't mean that we can get one more low before we get a big rebound. So this is the major theme I'm looking at. And if you look at everything else, like the Aussie, the Kiwi, etc., they more or less show the same thing. Now, having to do with risk, since the ascending wedge was not the play there, we're going back to the channel version, which we had a false breakdown from. Keep in mind that, yesterday we reached the channel's resistance, also the 127% extension of this leg lower. So once again, as the RSI is diverging, and I'm pretty sure, Dale, that you would say that so far this looks like a textbook 3-drive formation here in the RSI, right?
The RSI?
Yeah.
Yeah, I mean, there's massive divergence there.
Yeah.
Is that the daily? Yeah, it's very glaring. Yeah.
So, undoubtedly the trend remains higher, but I would be careful here. I mean, the risk reward is clearly stupid for somebody to buy right now, right here. I mean, we're at resistance. We non-stop rallied for more than a week in a market that has anyhow been a one-horse pony since the 20th of March.
Yeah.
So, I understand why you don't want to fade risk. I don't want to fade risk for many, 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 many months. I tried to fade risk during that period just twice with a very, very tight risk reward. And I don't regret it because it was a tiny, tiny, tiny risk. Other than that, I've kept saying that, in my opinion, equities are going much higher in nominal terms, right? Because of whatever is happening. Yeah. But that doesn't change the fact that at some point in the not so distant future, we need to have some type of a deeper correction. And when that happens, it's going to be sharp and it's going to be rather deep, but I think it's going to be short-lived. So,
Can you wrap it with one for me, Steve?
Absolutely. What's up?
The rubble.
Yeah, absolutely. So
Like
the USD ruble, there it is. So,
okay.
I think within a complex formation, this so far looks to be a corrective rebound.
Yeah, it does.
So,
yeah,
that's the most likely scenario from what I see here.
Okay. I know it doesn't make sense to want to buy the ruble with what's happening in the streets in Russia right now. But the chart, what do you think?
On one hand, I think that between the two economies,
Yeah.
I would choose the Russian
Russia.
economy at any given time. I know it sounds like an oxymoron, but the trend, I remind you that the Russian debt to GDP is something like 20%, while the US debt to GDP is 130%. The problem is not that much the 130%. It's
growing.
It's the unimaginable rate of growth that is literally parabolic. So it's, as we speak, it's 130%. I wouldn't be surprised if it's like 160% within the same year, which, as you understand, is a huge problem, right?
Yeah. Crowding out.
Yeah. So I'm not saying that I'm an advocate of the Russian system or that I like Putin or anything else, because this is not like a political statement, but it's economic facts, right? So that's it.
Yeah. Well, you kind of have a dictator type personality.
Listen, you've heard me many times rain down on the way the US is handling things.
Yeah.
I want to remind you that I'm a graduate of the Hellenic American Educational Foundation. My son is also in school there, and he's going to be for the next 14 years of his life. My partner is American. I'm a 100% pro-American person, and I'd rather live in a world that America has the hegemony. The reason I'm so critical is because I'm afraid that with whatever is happening, we're going to find ourselves sooner rather than later under the influence and control of forces that are a lot less democratic. And
darker.
Yes.
I know. Well, you know how I react just to what's going on in COVID.
Yeah. So my criticism is constructive. And I'm very, very much worried. I'm not an American. I don't have any American blood on me, although somebody can make the case that Americans anyhow have European blood. But I can tell you that I'm very much worried about the US, and the US has been a part of my growing up, and who I've become, and my education and everything else, right?
Yeah, you love America even though you're Greek. Like a lot of people used to.
Many times I feel like I love America more than Americans. You know what I mean? Because I seem to be,
to be more upset about what's
more strict and upset, and have a high standard.
And that's the dictator part in you.
Yeah.
I'm kidding you, buddy. Anyway, we all love Steve, and I apologize, with this new time zone, people are so used to it, but I'll reschedule George and we'll get him in here. So want to thank everyone, and take what I said seriously about not being cheap with yourself. Be generous to yourself. And if you really are serious about being a trader, this could be an edge for you, being part of our community. And it's a couple of pips a month for light, so that you get, I know you guys miss Blake's bias chart, so 2 pips a month to be a member and have access to it, and all the members only webinars, plus the members chat room that's going 24/7. So
and for those people that can't afford it, I remind you there is the light version, which gives you access to basic technical analysis, candlestick analysis, all the tools like the Squawk feed, all the private webinars, all the client webinars. It doesn't give you access to the chat room or to Harmonics or Elite Waves, but still the value you get for $19 per month. It gives you access to Data Flash, which just on its own, if you wanted to have just Data Flash, you would have to pay $10 just for that. So the value in the $19 per month, which, I mean, I can't believe there is somebody that is trading and actually believes they can make something with trading that can't afford $19 per month to get all that.
And you know what, I want to wrap it with this, Steve. I know that, we're almost at year 4 in FACE. And I know you guys like it because I see, the attendance every day and people watching on YouTube, etc. So it's also in your interest to make sure that we have a thriving business, a successful business to keep us around and being motivated to do it. Not that we don't have a humanitarian spirit, because we do lay it all on the court for you guys, but it's also in your interest for us to be around. So, thank you is nice, but becoming a member really is stepping up to say that you value the effort that we put into trying to help you guys make money. And with that, don't just count your pips, count your blessings. And Steve, I'll catch you tomorrow.
See the rest of you in 30 minutes.
Oh,
Bye-bye,
yeah, that's
coach.
right. Yeah, the whole team. See you later.
Yeah.
Adios.
Bye-bye.
Bye.